You're about to listen to the Yet Another Value podcast with your host, me, Andrew Walker. Today's podcast is it's a company that I have been completely torn on since it first emerged as a SPAC, buying a bunch of oil and gas investments from Exxon Mobil a few years ago. I know those words are huge red flags, and that's why I've been so torn. You can see multi-bagger upside, you can see zero downside. It's really interesting. My guest today is Ben Kalleran from Kontrarian Korner. I'll include a link in the show notes, but he has done a lot of work. He's talking to a lot of people on it. He's very up to speed on the process. I hope you're going to find it interesting. We start with a broad overview. We dive deep into the minutia of the case and everything in between. So hope you're looking forward to that podcast. I'll disclose small tracker position in it. So please listen to the disclaimer at the very end of this podcast. We're going to go to the podcast with Ben on SOC, but first, a word from our sponsor. Today's podcast is sponsored by Dalupa. Are you still manually updating your financial models after earnings? Ask yourself, why? Every quarter, analysts lose hours copying numbers from filings, adjusting templates, and double-checking for errors. It's tedious, it's time-consuming, and it's a terrible use of your time. Dalupa changes that. They automate your model updates with near real-time precision, using AI that's been trained on thousands of companies' filings across every sector. The result? You get a fully updated model in your format with your logic faster than ever before. Every KPI, every footnote, every guidance figure, exactly where you need it with source links built in. So stop wasting time on data entry and start focusing on what really matters: analysis, insights, and alpha generation. Dalupa doesn't just save your time, it gives you time back where it matters most. Book a demo with the Dalupa team today at dalupa.com/demo. That's Dalupa, DALOOPA.com/demo. All right. Hello and welcome to the Yet Another Value podcast. With me today, I'm happy to have from Kontrarian with the K Corner, Ben Kalleran. Ben, how's it going?
Yeah, thanks for having me on. I'm a longtime listener, first-time caller, so I appreciate you having me.
Look, I was so excited to say Kontrarian with the K. I forgot to say I'm your host, Andrew Walker, and everything. I'm way off my sorts. We've got a really interesting podcast. I will tell you, this is a stock that it's one of the stocks I've been most torn up over the past year plus. We'll get to the stock in a second. Before I get there, a quick disclaimer: nothing on this podcast is investing advice. That's always true, particularly true today, maybe because there is a little bit of binary risk here. And I'll just disclose that we have a tracking position in it. So it won't kill us one way or the other. If it goes to 1,000, we'll be killing ourselves. We had a tracking position. If it goes to 0, we'll be killing ourselves. We have a tracking position, but it won't trade it, unfortunately. So that's my disclosure. Ben, the company here is Sable Offshore. The ticker is SOC. It's probably definitely the most popular energy stock on like retail FinTwit. One of the most popular stocks out there. As I said, I've been following it for a long time. I've been torn every which way on it, but I'd love to just start with from you. What is Sable and why is it so interesting?
Yeah, so the short version on Sable is that they are in the process of bringing online the best oil and gas asset in the US over the last several decades. It's called the Santa Ynez unit. And I think it's going to be the closest thing to Saudi economics in the US once they ramp production. So that's the reason I think a lot of people are bullish. There's a lot of legal and regulatory hoops they've had to jump through, a lot of complications. We even saw some of that today as we're recording, but it's the short version is that it's basically the exact opposite of assets in the Permian, where it's low decline rate, it's long reserve life, and very low cost to produce. So I think they have 50, 60, maybe 70 years of reserves in place. And I think they're going to be producing for a long time once they kind of weave their way through the legal and regulatory hoops. So I know a lot of people look for like high quality businesses and basically avoid energy altogether for that reason. But if you look at an asset like this, I think there's a lot of reason to believe that it can be a very high quality business for a very long time.
Cool. That's great for you. I think one of the most important things here is the background here, right? And if I'm remembering my dates correctly, Sable comes out of Flame Acquisition Corp, a SPAC, and they announced a deal to buy the assets you were talking about from Exxon Mobil in, I think it was late 2023 is when they announced the deal, and the SPAC deal closes in 2024. So look, if we threw these into three buzzwords, I would have California oil drilling, and then you would have former SPAC, and then you would have bought from Exxon, right? And I know a lot of people
might as well throw in pre-revenue while you're at it, because there's no revenue right now.
Exactly.
So,
but I know a lot of people who, and myself included, when I say I get torn every which way on this, if you just said pre-SPAC, California Energy Drilling, pre-revenue and bought from Exxon, you'd be like, cool. I can't imagine a worse set of things for getting my face absolutely ripped off. So I'd just love to start, like, when you hear that history, why is this not run for the hills?
Yeah, so I think part of it is it's a little bit of a bet the jockey play with the CEO, but it's also, if you look at the quality of the asset and you look at the regulatory loopholes that they've jumped through and the process they've gone to here, if your base case is that this thing restarts and gets to a regular production level, the upside here is massive. And it's always been kind of framed as a binary outcome where it either restarts or it doesn't. And I've kind of been talking about that with the narrative shift post, where it's going from like, will it ever restart, to what is it actually worth? And the biggest thing that is kind of holding that back is, okay, you have lawsuits flying everywhere. It's kind of the case of compounding lawsuits, as one of my friends called it. But basically, I think they're going to be producing. I think it's going to be fully operational here in the near future. I think the upside when that happens, even if oil stays at $65, $75 Brent, you're looking at significant multi-bagger potential. So
Let's quickly lay it out. So as we're talking, oil is 65. I know a lot of people like this because it's low cost and they think oil is going to 200. But you'd probably be better in a high cost oil play if you believe oil is going to 200. Let's just quickly talk. How do you look at the fair value of this company?
Well, I think the binary side, as far as like looking at the downside, is where I think a lot of people kind of assume that it's a zero if you end up in going into a takings claim, end up in court and jumping through those hoops. And in reality, I think they have a very strong case for $7 to $10 billion, aka $75 to $100 a share, give or take, of damages for like what the asset is worth if it does end up in court. I think that is unlikely at this stage in the game, but that's kind of the downside case.
Mm-hmm. I just want to make sure we lay it out. So the takings claim would be, and you can tell me if I'm wrong or you can dive into it further. Mm-hmm. They bought these assets from Exxon, and I want to talk more about why Exxon sold them and everything. But the takings claim, just so people know, what's being held up here, I guess this is a broader view. These assets are good. There was an issue in, I think it was 2015 with these assets, right? And these assets were basically paused. The assets are ready to run again, but the state regulator is refusing to allow them to make the final necessary repairs or just put oil through them. So that's the huge binary that's happening here. And what you're saying is, on the downside, a lot of bears say, hey, California will never let these guys run oil and gas through these pipelines again. And you're saying, hey, that's fine. If that happens, and you're not the only one, I know multiple people who've told me this, if that happens, they're going to sue the state of California for a takings claim and say, hey, these assets, the fair market value of them was $7 billion, $10 billion, take your number. You owe us $10 billion plus interest from when you illegally took it. And we will happily collect that and pay our shareholders $100 per share. Am I summarizing that correctly and everything?
Yeah, I think at a high level, that basically sums up the takings claim. Like, people have talked about the difference between delay damages and what could happen if this thing gets to production and what the court proceedings look like at that point. But at a high level, if they're not able to restart, you have a very good case for 10 billion. Some people think more, but basically a lot of money where the state will eventually be on the hook for a massive takings claim. And that means like a bond and all these different things they would have to do that I think the state would like to avoid. And I can jump right into, you're mentioning Exxon, like why would they get rid of it?
Yeah,
I can jump right into that next.
Yeah, because that's the other thing, right? I think one of the big issues here is people look at that and say, look, ExxonMobil is about the most sophisticated buyer and seller of oil and gas properties you can imagine. If there's any politics to getting this over the finish line or like nudging the people in the right direction, ExxonMobil is probably the best lobbyist out there, short of maybe like the farmer or the ag lobbies. So you have ExxonMobil saying, hey, this property's been shut for 7 years. Sable, we will take your, what was it, 300 million in equity. We'll give you a lot of financing and go with God. Have this property for, it was a SPAC, $10 per share SPAC. And you're tossing around in a takings claim, they're going to get $100 per share after a decent bit of the SPAC route too. So why would Exxon just, willingly give over a 10 to 20 bagger, depending on how many shares you had outstanding?
So I think the first thing to look at for Exxon side is for the size of their business. This is a great asset, but it really doesn't move the needle for a company the size of Exxon compared to their Guyana assets, what they have in the Permian, and basically their international operations. And secondly, they also, with California regulations on oil and gas, they basically have it set up where not only do they want to regulate the operations in the state of California, they want to regulate the international operations as well. And so that's a big landmine for a company the size of Exxon. So
just to make that clear. So, and I've heard this from other people too. California, if you operate in California, I believe they say, hey, by operating California, all of your international operations must like kind of subscribe to California law. And if you're Exxon, which is operating in Guyana, and I'm not describing anything that, but you might not be operating with the environmental standards that California would feel comfortable with, or you could imagine there's some parts of the world where bribes need to be done. And, I'm not accusing Exxon of making bribes, but if they get caught
I'm sure it's happened before.
Yeah. And they're getting California regulations, like that's going to be an issue. So you're saying, hey, it wasn't just that they were giving Sable a gift. It was this asset was actually an active drag on the rest of Exxon's, multi $100 billion portfolio.
Yeah, and I think they were spending somewhere to the tune of 50 to 70 million a year when this thing wasn't producing, just to monitor it, maintain it, do all that stuff. So it's actually a drag in that way as well. And there's a reason other oil companies have basically sold or spun off a bunch of their California assets. You see Chevron moving their headquarters out of the state. You see refineries shutting down, all these different things. And it's whether it's emission standards or different gasoline types for the refineries, there's a lot of reasons for energy companies to say, look, we want nothing to do with the state. We'll find a better environment to operate in.
Perfect. You mentioned this was a bet on the operators, right? And I'd love to just deeply to dive into that a little, because again, I think one of the big pushbacks you hear is Exxon sold and they sold into a SPAC. I can't imagine a worse set of like overarching circumstances for an investor. So I'd love to just dive deeply into the management team, what you're seeing here.
Yeah. So the CEO, I think, is like I've heard from a couple of people that they think he's the only guy in Houston that could pull this off. And I think his name's Jim Flores. But I think when you look at his ownership between what he has currently and then his stock options that vest over the next 9 years, and then founder warrants from the SPAC, I think he's going to end up with roughly like 30 million shares. So he's going to own over a quarter of this thing pretty quickly. So definitely have some alignment there. And if you look at his experience, like you go back to Freeport, McMoran, oil and gas, they operated the platforms that are actually just to the west of the Santa Ynez unit. So they have experience in that region of the world. They know what they're doing as far as these assets. They have a pretty good idea of what's down there as far as the actual resources. And I think when you look at the operating team, the people that have experience on it, I think that's a big reason to be confident that they can kind of weave their way through the legal stuff. And then once it's up and running, operate this thing to the best of their ability.
So if he ends up with 30 million shares and let's say the takings claim is $100, like you do the math pretty quickly, this man is going to be a California oil billionaire. That'll be
he stands to make billions if he gets it right, and the upside is what I see. So
let me ask you, so the other bear thesis here is, hey, this company, California, is never going to let them produce oil. Now you've already talked about the takings claim as a downside protection if that happens, but let's just explore the California will never let them produce oil. You and I, we're talking June. What is it? It's June 3rd. There was, as there is almost every week with Sable at this point, there was like legal news today. We'll dive deep into the legal news. We'll dive deep into the legal news at the end of the product. But I just want to overall, what's the path for California to let them start producing? Because when I look at this, they did the de-SPAC. The first de-SPAC deck was from March 2023. And they were guiding to first oil getting produced in January of 2024, right? We're talking June 2025. Again, it's June 3rd, 3 p.m. Eastern, June 2025. They haven't even started producing oil yet. So we're already almost 18 months past where they talked, and we're still not there. I think the bears would say, hey, you're 18 months behind, and just California's never going to let it happen. So, like, how would you respond to that thesis drift, and how would you respond to eventually the kind of oil getting produced here?
Yeah, well, one thing I guess to clarify your question before I kind of answer it, they are actually currently producing oil and they're filling the onshore processing facility. So I guess maybe if I can back up a little bit too and talk about the actual asset itself.
Sure, yeah.
They have 3 fixed platforms in place. The Santa Ynez unit is basically a block that Exxon consolidated, and it's 76,000 acres, like 118 square miles, like massive. And they have a pipeline from the platforms to the onshore processing facility, which they're in the process of filling now. And then they have a pipeline that is, I think, 11 miles, give or take, and then a 110-mile pipeline from there out to where they send it off to refineries. So basically, they own the whole process from pulling it out of the ground to sending it off. And they're filling the processing facility right now, which is basically what they're waiting on as far as the last piece is regulatory approval from the fire marshal to sign off and say, yep, you guys have fulfilled your end of the consent decree, made all the repairs, taken care of the pipeline, basically done everything you needed to do. And we're ready to sign off. And that's where maybe some of the legal question marks and legal cases that have been going on lately kind of come into play. But the hydro testing is done. All the different things that Sable needs to do to be ready for full operations have been completed. So it's basically on the goal line, and the legal stuff is what's making the situation cloudy right now. So I don't know if you have a different direction you want to take it from there, but I can kind of take it wherever you want. So
no, yeah, let's just quickly. So let's say they get the units online, right? They start processing. Again, we'll talk full legal situation where we stand today. Let's say they get the units online. What does the economics of this kind of look like?
That's where I think the bull case gets pretty interesting. I can kind of get into it, but basically, if you had a chance to look at the production guidance they put out on when they announced first production, they went from 20 to 25,000 for the second half of this year to 40 to 50,000 barrels a day, and dropped the lease operating expense so lifting costs to 11 to 13.50 a barrel, and 80% of that is fixed. So basically what I think is going to happen over the next, say, 18 months is you're going to see production ramp, production ramp that lease lifting costs will basically, I think, go below $10 a barrel. And they obviously have other costs in there from like gathering, processing, transportation, all that, and then G&A. But the actual cost to get the oil out of the ground is going to be pretty similar to what you see in like places like Saudi Arabia, places like Guyana. And you have, I think, a setup where the actual cost is going to come down. I think they're being pretty conservative on their guidance for production for the second half, because they basically doubled it with one platform just coming online. And the first 6 wells they drilled or tapped were 6,000 barrels a day. So 1,000 barrels per well a day. And if you look at the other platforms and kind of do the math on where that leaves them for the second half, they're planning to bring on the second platform in July and the third one in August. I wouldn't be surprised if they're updating their production guidance here again in the next several months. We'll see what that means for end of this year, but I wouldn't be surprised at all if they're producing 60,000, maybe more a day by the end of this year.
If they're doing $50,000, $60,000 barrel per day, $10 lifting costs, I think they've got like it's around 15% royalty. I can't remember the exact number. So what does that translate into kind of EBITDA, free cash flow, all those types of things that people would be thinking about?
Yeah, it was I'll pull up the royalty here if you give me 1 second. It is 16.4% royalty. So as far as what that turns into, like operating results wise, I basically have kind of looked at it and like, if you look at it for a full year and say, hey, they're going to do 70,000 barrels a day, at $70 Brent and natural gas at, call it 5, because you get California nat gas pricing. I mean, these are all rough numbers, and you say, okay, lease operating expenses 10, you have other costs in there. You're looking at, what's that, 1.2 billion in EBITDA for a full year, which I think compared to the current stock price is pretty attractive. And obviously, there's going to be CapEx like next year. I think is going to be a little bit heavier on the spend there. But I think it's one of those things where it turns pretty quickly into a capital return story once they ramp to a certain production level where they can pay out a $4 annual dividend is what they've said, and then basically buy the stock in from there and fund operations with plenty of headroom at that point.
So let me I don't even know if this is pushback, but my numbers came out pretty similar to yours, right? I just kind of, a billion versus 1.2, what's 200 million of EBITDA among friends? I just kind of had, it comes out to about $1 billion of EBITDA at those numbers. I think it was a little lower on oil, but whatever, what's 100 million among friends? The enterprise value today is between 3 and 3.5 billion, right? So you're talking about buying this for 3 to 3.5 times EBITDA. The CapEx, as you said, there might be some, but this is a platform that's been operating for, despite the past 10 years, like kind of 30 plus years. There shouldn't be a lot of CapEx once this comes online. So this should be really gushing cash flow. I don't think it's a stretch to say 5 times unlevered free cash flow to equity is kind of what you're paying now, which sounds great, right? 5 times unlevered free equity, 20% cash flow return. I think one pushback that I've had is, hey, that sounds really cheap. But guess what? All energy companies are really damn cheap, right? Like, this is in a California jurisdiction that has shown over the past 18 months, they don't want oil being produced here. This was shut down for a while. It's going to be really expensive to do repairs. If there's any issues, they're going to throw the red flags. And you can go buy a lot of other energy, oil and gas companies at similar or maybe even cheaper valuations. It's not unheard of for small energy companies with pristine assets to trade for PV 20s or, 20% yields. So I think one pushback I would have is, hey, in an absolute sense, yes, this is cheap, but in a relative sense versus some of the peers, aren't you kind of paying a peer-like multiple for something that does have binary risk?
Yeah, I guess the response there is if you look at the reserves too and kind of factor that in. I know they put in their investor deck, I think, 646 million barrels recoverable. And I've heard a lot of different people talking, and I think the way I'd put it on reserves is I would take the over on 1 billion barrels of recoverable reserves. I think they were saying like there's 15 billion barrels of oil in place. So I think what you're going to see over time is the reserves will step up, and big picture, I look at it is, okay, you're buying Saudi economics in the US for call it $3 to $4, maybe $5 a barrel in the ground. And if you look at other competitors on a kind of reserve basis, your valuations are going to be anywhere from $10 to $15 a barrel. And right there's obviously single asset risk that plays into it, where it's like, okay, you've got single points of failure with the pipeline, like you saw in 2015, and you have other things where it's California, and so maybe that gets a discount. But if you like also factor in what their margins will probably be after ramping, right, that factors into the valuation as well. So I think there's a lot of different moving pieces that will get simpler over the next 12 to 18 months as this thing comes online, ramps production, and the numbers start to speak for themselves.
2 last questions, and then I want to talk about up-to-date risk. I know this is a frequent one I got from people who are bearish or skeptical here, right? They kind of put out a PR that says, hey, Sable reports restart of oil production at the unit and anticipated oil sales in July 2025. They put out that PR on May 19th. They have an investor deck that goes alongside with it with all the updated guidance, everything we're talking about here. And in that investor deck, I'm looking at it right now, page 14, financial objectives: refinance our first term loan, implement a hedging program, institute aggressive shareholder return program, targeted fixed quarterly dividend, opportunistically repurchase shares, right? So that sounds great. That's everything you want to hear. 2 days later, they come out and the stock pops into that, and 2 days later, they do a pretty sizable equity offering, right? I think it was $256 million worth of stock. And I know a ton of bears, and again, myself as a skeptical person who's gone from like, I want to YOLO Sable to, oh my God, I'm so scared of everything. You look at them, you say, hey, literally 2 days after saying oil's coming, the gusher's finally here, we're ready to start paying the dividend, we're ready to start returning capital to shareholders. They do this massive equity offering, and you're just like, wow, when management's actions don't match their words, it's a big red flag to me. So I'd love to talk to you about like, why is that not a big red flag that they came out and did this enormous offering right after saying we're almost to the capital return program?
Yeah, so I think the main reason they did the equity raise, when you look at their cash balance, if I remember right, I'll be in the right ballpark. I think they were down to like 190 million in cash at the end of Q1 of this year. And so equity raise was 6 weeks after that. And obviously
it was 189 million, good sir.
I'll be taking a mulligan on that, I guess. But basically, right, they were running at that point lower on cash because they basically, to get into the park to repair the last section of the pipeline, they had pipeline crews on standby. So I think that was like $4 million of cash burn a week. They had higher legal expenses than expected for obvious reasons. And so they're getting to a point where it's like, okay, if our timeline to first sales is in July, that revenue starts to show up in August, and it's going to be early flow rates where it's not like you turn on the taps and like you're getting a massive amount of revenue right away. Then it basically was something where I can understand why they didn't want to run into a cash crunch as far as, okay, we have to make it another 4 months. We have to try and bring all these platforms online. We have to make sure we can navigate the legal side of things and do whatever that requires. I think it says a lot that the stock was down like 6 cents on the day. I think it basically took like a 10% haircut in the morning and ended the day like down 6 cents of the equity raise. But the big picture is that, okay, we're diluting here, but this is kind of the last stop for share issuance because we've finished all the repairs, all the hydro testing's done, and we're kind of at the stage of the game where we don't want to run into issues that would potentially cause problems with the refinance and operations and other things. And with the equity raise, it also puts them in a stronger position to refinance the Exxon debt, which starts when they started production, has a spring maturity of 240 days. So I think it's like January 9th of 26 is the absolute latest they could pay Exxon back. And if I remember right,
has that started now that they put out that press release on first oil? So the spring has started.
Yeah. So from what I've heard, it sounds like they're shooting for a refinance in September. I think at the end of Q1, it was like 830 or 840 million outstanding on the PIK debt for what they have to pay back. And now they're basically in a position where they're cashed up. They're not going to run into a cash crunch as far as operations. And they could potentially refinance with a lower amount. I think the numbers that I've kind of talked about with other people, it's like, okay, is the refinance they issue 800 million? Is it $1 billion? I mean, I think it's going to be somewhere in that ballpark. I think it's probably going to price at 8 to 9%. And we'll kind of see where that goes. But my guess is they get that sorted sometime around September, October, from what they've been saying.
That makes total sense. Is there risk in your mind? I don't want to dive into, I want to save legal to the end, and I've got like 1.5 more questions, but is there risk in your mind that you mentioned a September refinancing? The loan has now sprung till January, that they're actually not producing before then, given the state of the court cases right now?
Well, I think the timeline for the court cases and the actual facts in the case basically put Sable in the driver's seat, whether that ends up in federal court, whether it gets sorted in appeals. I think there's the way I'd put it is I don't think the legal uncertainty is dragging for months. I think there's going to be some resolutions here pretty quick, and we can obviously get into that in more detail, but I don't see an outcome where it's like, oh, like they spend 6 or 9 months or a full year in legal limbo and they have the processing facility full of oil and they have to figure out like, hey, do we put a tanker out there to get the oil to market? Do we like try and do something with trucks? Like I don't see that happening at this stage. I think the legal side will get resolved pretty quick.
Okay, let's transition to the legal side after this one last question, which I think will serve as the last question. I've mentioned I've been all over the place on this. But I think the last risk I've had in my head is this is a highly volatile stock. And like you, and I have really smart friends who are in this name. And I worry that if you are not like singularly attuned to this stock, and I don't mean this in terms of like following the up and down price action every day, but I mean this in terms of like burning the phones down, talking to people around the court case, talking to regulators, talking to like whoever it is, talking to probably reporters, whatever it is. Definitely watching the local what is it? The local environmental things, which can get pretty interesting, right? People are bringing in inflatable balloons, and Julia Louis-Dreyfus, I think, makes an appearance. But
yep.
One of the
Jane
things I'm worried about,
too.
as someone who runs like more than a fund of one, I worry that if I got involved, it's something that every trade I make is going to be negative EV, right? The game selection goes really against me because my friends who are following this, and I'd include you in this, having read your stuff on it, they like know the next card, and 5 minutes before the market does, they know what the next card's going to be dealt. And if it's a delay, like I know friends who are long, short, like just whipping this all over the place. And I think they're making huge money, and that's awesome work. They're getting paid for doing great due diligence. But I worry if I'm not doing that work and I just sat here and was like, let's say I sat here and said, I think this is going to come online. Ben's right. Saudi economics in the United States, $75 stock once this comes online. Like, I'm going to buy, and then it's going to be down 10 up to, I'm just worried I'm going to get my face ripped off by somebody who's got better information. And if they know that it's not going to happen, they're going to short the shit out of this thing. And then I'm going to get a press release from Sable, 4 hours later that says, hey, we lost the court case. And I'm going to be like, oh my God, the people who knew ahead of time. So anyway, I'm worried I'm buying into a negative EV game if I'm trading this and not wholly focused on this. Which is not a bad thing, right? It means there's a lot of alpha for someone, but that's my big worry here. What would you say to that?
Yeah, I think it kind of depends on your view of the long-term value. And if you're playing with options, like buying burning matches like I have in the last week, so that didn't feel good today. But I think with shares,
I just have to disclose, remember, nothing is investment advice. You can listen to the disclaimer at the end. Options are super risky. I just always got to disclose that when options get mentioned.
Yeah. But basically, if your view that fair value is much higher than the current share price, then I think if you're just buying shares, if you can stomach the volatility, I think that's where it's like, okay, if you think oil is going to come, like they're producing, if you think the fire marshal signs off, if you think the court cases come to basically you get more clarity there, then like could it be $23 like tomorrow? Like sure, but when you get fire marshal sign off, I think the market is going to reprice it very quickly because you have a setup where at that point you have a fully operational Santa Ynez unit. And so that like I've talked to people where it's like, look, I don't want the brain damage of dealing with this thing. Like tell me when the fire marshal signs off and I'll buy it. Because like with what I've explained to them, they're like, yeah, sounds cheap at 30 and 40. And so like, why not just wait until it's a little more clear?
I mean, that actually might be the right thing because you start gaming it out and you're like, well, as we're talking it's June 3rd, 3 p.m. At 25, it's like, hey, if the stock's going to be 35, but the fire marshal's 100%, that actually might be a better risk reward. So let's talk about that. We are talking here, June 3rd, 2025, 3:30 p.m. Eastern. As I mentioned in late May, they put out that, hey, first production. What's going on today? Like, what's the state of play? What's the legal situation? What does it take for this to actually get production going? When are we going to know if like kind of real production and everything's going on, or if they're going to have to go to court to get this?
Yeah. So I guess over the last couple of weeks, starting with production, right now they're filling up the processing facility, and they announced on Wednesday before the court hearing, they're suing the CCC, but before the court hearing that all repairs are done and all hydro testing is complete. And I'm paraphrasing, but that satisfies their end of the consent decree, and that basically it's ready for full operations. And then on like Tuesday night, there was like a tentative injunction put in place like night before the Wednesday hearing. On Wednesday, they kept the injunction in place. And so that's where I think stock got whacked pretty good on that news, where it's like, okay, what does this mean? Why are they putting an injunction in for repairs and hydro testing that's already been complete? Right. So that's part of the gymnastics from last week, where it's like you have to figure out, like, okay, what does it mean? Like, why are they doing this? Seems a little bit ridiculous to try and do something at that stage after the work has already been done. And when you kind of go through the mental math on that, it's okay. That part of what the CCC doesn't impact the fire marshal sign off. And so my view was that, okay, sometime this week we'd get fire marshal sign off. And that was before the hearing with the EDC, but I'll get into that separately. And it's like, okay, everyone's panicking because there's an injunction. What does it mean? But my view was like, okay, if Sable did their side of the consent decree, right, installing the best available control technology, the pipeline check valves, shutoff valves, did the hydro testing, like basically the whole nine as far as making sure the pipelines are repaired and safe for operations, then the fire marshal signs off. It's not a discretionary decision of, oh, like there's some legal question marks going on, and so we have to wait and withhold the certificate of operations, or there's like kangaroo court proceedings going on and we have to make sure that gets resolved first. It's really like, okay, we're the state and federal regulator. You guys did what was said in the consent decree. We're going to sign off. So like that was what I was expecting this week. And instead what happened is why the stock is down, 15, 16% today. And the EDC is suing the state fire marshal and Sable. I think it's along with the Center for Biological Diversity. But they're suing basically to stop the fire marshal from signing off, which is going to be an interesting case to try and win for them. But basically what is going on there, if you kind of look at the case at the highest level, right, the fire marshal in the state, California state constitution, the fire marshal is the regulator for like all pipelines in the state, right? So they're basically coming in and saying, actually, like, you guys can't perform what it says in the state constitution. Like, it's a massive overreach, saying we don't want you guys to sign off because we don't want the company pumping oil and so on and so forth. And even though, right, consent decree and all this other stuff, they're, I mean, suing, they basically had what I would call a home court advantage, and I think it'll end up getting appealed pretty quickly. And I don't think it will survive appeal. I'm obviously not a lawyer, like former CPA, but I don't think it'll survive appeal because there's no imminent harm. If you have waivers that were issued 6 months ago, and like to say, oh, there's imminent harm like 5.5 months later because they're pumping oil now, like doesn't make a whole lot of sense. And they got an expansive TRO, temporary restraining order, even though the lawsuit is just for waivers. And you can't really stop the fire marshal from doing their job as the regulator in the state. And like, in theory, they would be forced to refile a lawsuit and have a broader, basically refile to target everything. And I think there's basically, if it goes to appeals, gets overturned, the fire marshal approval is coming shortly after that. And if it goes to appeals and like doesn't get overturned, then the fix is in, and it ends up in federal court, like in pretty short order. So the like uncertainty and all the stuff is like, okay, the Greens, like EDC, CCC, all these alphabet soup types, they're going to keep throwing lawsuits to see if anything will stick. But if you look at the consent decree, look at the different agencies involved and who actually has oversight, I think the lawsuit will be a bad memory in 3 months or 6 months or whatever it may be.
So so let me just make sure I understand. So the fire marshal has the sign off. They cannot give the sign off until this current lawsuit is resolved. And I think there's a TRO until July 18th, if I'm remembering correctly. So July 18th is kind of the earliest that you can get the sign off at this point.
Well, that was the next hearing for, excuse me, next hearing for the EDC and biological diversity case. But in appeals court, that'll happen quicker. So I think that they had an appeal in the CCC case, and that was resolved in, I think, like a week. So it's not something that's going to be, oh, we're waiting for 6 weeks and then the next hearing and same judge. Like there's going to be other factors in play. And I think it's going to happen quicker, where it's like, okay, you have a different judge. You have like the appeal laid out where it's, okay, this is a state regulator. It also happens to be the federal regulator on this case. And they're like well within their purview to give the certificate of operations, to give waivers, basically perform like a regulatory agency in the United States. And that's where it kind of lines up and is like, okay, if something goes wrong in appeals, like, yes, it's complicated, but it goes to federal court. And I think there's, my guess is there are interested parties that don't want this thing to end up in federal court, because you can go back to the takings claim and delays and like what that would mean for Sable and operations. If they have to like fight this out in court and it turns into some 6-month or 1 year type circus, then it's going to be something where the damages keep stacking up. So
well, let me ask you about the takings claim, right? So I have consistently heard over the past year that the ultimate end game is, if Sable keeps getting denied, they will hit a bunch of boards with the takings claim for $10 billion. And then the board's kind of full, because none of these boards, they can use, it's funny money when they're hiring lawyers and charging it to the citizens. Like, that's funny money, but a 10 billion claim, they can't too. In a takings claim, I guess my two questions would be, who are they hitting with the takings claim, right? Because they continue to own it. They're just not getting all the permits to waive it. Are they hitting one of the, the environmental board? Because the environmental board says, hey, you need to win the lawsuit, right? Like, how can you have a takings claim if they're suing to prevent you from doing something?
Yeah, the takings claim would basically be against the CCC, and that would end up, right? They don't have the pockets to like put a 500 million or $1 billion bond or whatever it'd be. And so basically the financial responsibility would end up at the state level if like the takings claim is big enough. And I think they, when they sued the CCC, they also included to sue for personal liability. So there's, I think, going to be a lot of stuff that comes out in depositions and all these different things before they go to trial that make it pretty interesting. But my view is that that case will get settled after oil is like, after the Santa Ynez unit is fully operational, after oil is flowing, and it turns into, okay, as long as the CCC and these other environmental regulatory agencies, nonprofits, these different groups, as long as they go away from now until the end of time, then we'll settle with you guys. It's not going to be like, we're still going to go after the state for 250 million or 300 million or 500 million if operations are ongoing.
Let me ask another. So what would the all clear date? Like, if I was a listener to this and I said, hey, Ben's got an interesting thesis, but I want to invest, he mentioned earlier, there are people who want to do it when the all clear is good. What is the all clear? When is all of this legal liability in their past, all of this? And when can you just say, hey, I want to underwrite this on the economics that Ben said, Saudi Arabia in America with a pipeline in California? When is the all clear date when all of this would be behind? Like, what would the signal of that be?
Basically when the 8K drops that the fire marshal is given certificate of operations, because at that point,
so there's no stopping it once the fire marshal's given them certificate of operations.
Basically, they're ready to pump oil, send it through all the pipelines, send it out to refineries. And at that point, you'll have the legal case going on in the background, where I think they were saying that the CCC case might drag out sometime into 2026. So that'll be ongoing, depending on how quickly that resolves or settles or whatever the outcome may be. But it'll basically be background noise to, okay, they have this operating business and its lifting costs are $10 a barrel or lower. They're basically ramping production and they're producing 60 or 70,000 or more barrels a day sometime in 2026. And you kind of do the math on that, and it's like, that's a lot of dividends and a lot of buybacks, and I think a much higher share price. So I think the short version of the all clear is like once the fire marshal signs off, then the whole Santa Ynez unit is ready for full operations, and the court stuff can be going on in the background, but that won't just evaporate when the fire marshal signs off.
I guess kind of last question. So the fire marshal, it overrides everything and they can just operate everything else while getting sued. Because one thing that jumps out to me is like you read the prospectus, the most recent prospectus, and the recent events and legal liabilities. Have I seen longer? Probably, but I can't remember off the top of my head. And they just keep disclosing more and more lawsuits coming in, right? Like in the prospectus, I believe it's the first time the water board is suing them and issuing them notice of violations. There's a state parks matter where the state parks gives them the right of entry permit, and they immediately get sued by the EDC and get oil out and all this sort of stuff. Let's see what else. CalGem says, hey, you've got to post a bond of 32 million, submit to certain contingencies. Like it just goes on and on and on. I guess the fire marshal is the end all be all to you. Like you don't think once that's done, you don't think any of these other agencies and they could, the water board could come in, their control board, there's nothing they do at that point to kind of slow down. They can do, but can't.
I think as far as agencies can stop actual operations at this point, it's basically Marshal, which is why people are. And if in the future something pops up with lawsuits and other state agencies, like the water board is on the consent decree, and it basically consent decree is basically then all these state agencies where permits or approvals or whatever it may be are required, then they have to grant those in a reasonable amount of time. And I'm paraphrasing that obviously, but basically they can't just withhold because they have like the Environmental Defense Center calling them up and saying, hey, you can't let these guys in to repair. I think that was part of the delay with parks is there's outside pressure to like not let them in to finish those repairs that were done 3 or 4 weeks ago. But the big picture view is that once it's fully operational, then there may be issues in the future, but I don't think it stops operations.
One more question. I'd be remiss if I didn't ask this. I don't think this is purely accurate, but I had a few friends lob in questions when I said we were doing the episode on Sable has been long requested, but a few friends lobbed in, hey, if this is such good value, why is it mainly generalists and retail focused people who like this? Why aren't you seeing lots of oil and gas funds kind of piling into this on the relative value? And I don't think that's quite fair because I do know 1 or 2 oil and gas funds who are interested in this, but I think they are right that in general, of the 100 oil and gas funds out there, only a handful are kind of interested in that. So I just pose to you, why do you think it's more generalist and retail focused than like dedicated O&G who are interested in looking at this?
Yeah, I think the biggest thing is the California risk, right? You have kind of the state of the market right now is the whole market hates energy, and even the energy people hate California. So you kind of have that double whammy where you're not going to get as many eyeballs for the energy sector in general, but you're also even the guys that have a focus on energy or are dedicated to it. Question of the mental gymnastics required to own this thing like ahead of a fire marshal sign off, where I've talked to bunch of people and they've talked to funds and different things where it's like, yeah, just call me when the fire marshal gives the green light and then like we'll definitely buy it. But for now, it's just kind of in the too hard pile for a lot of different investors, especially for like what kind of position size they might be willing to put on.
No, I think you hit the nail on the head. Oil and gas investors tend to be more on the libertarian side, let's say, and they generally hate California. And anything that has assets in California, I think they reflexively vomit. And then you say, hey, not only are they assets in California, but California is actively trying to stop them from doing this, and it's been 10 years. And you know that like the bell curve where there's like the guy drilling out his mouth and the super genius on one end, and then there's the guy in the middle. Like I think they would say like maybe they're the drooling ones and they're saying, hey, California oil and gas never works. And maybe ExxonMobil's the super smart one saying California oil and gas never works. And everyone's in the middle saying like, no, look at the upside. I think that's what they would kind of say. And it does resonate with me a little bit, but then you're like, hey, the takings claim would be pretty big. Ben, I think we've summarized and covered everything pretty well. Anything last thoughts or anything like kind of you're looking for that listeners should be thinking about as we kind of, we're recording this June 3rd. I'm sure there'll be 8Ks drop between now and when I release this June 6th or June 9th. But anything listeners should be kind of looking forward going forward?
Yeah, I think there's like a case management hearing tomorrow on the 4th for the CCC. I think that is, we'll see what happens with the injunction there. I'm not sure if there'll be any movement, but again, like the pipeline is just repaired and the injunction doesn't actually stop operations on the TRO regarding the fire marshal. Then I think it's most important to see, okay, does it end up in appeals court, which it probably will. Like that, I think is a safe bet, and they're not going to wait until July 18th for the next hearing date with the same judge. So, like, what is the process of appeals court? How quickly does it end up there? What is the result? If the TRO gets tossed out, then I would expect a fire marshal sign off in short order after that. So I wouldn't be surprised if it's like, okay, TRO is gone, like fire marshal sign off the next day, because all the stuff that they've needed to do from repairs to hydro, everything is complete. So that's kind of the next, I guess, checkpoints. And then from there, I'm interested to see, okay, you have things lining up for the next 6 months where we've got the first platform online. The fire marshal sign off should be happening relatively soon after the TRO gets tossed. If not, it ends up in federal court, and that's a whole nother can of worms. I think that's unlikely, but it's possible. And so fire marshal sign off, you've got other things that I think are pretty interesting. I think the short interest is like 13.8 or 13.9 million shares. So like got 14% short interest somewhere in there. If the fire marshal signs off, then you're going to see new investors, shorts, bunch of people rushing the entrance. And then you've got a bunch of different catalysts kind of farther out where it's second platforms online, third platforms online, and Q4, it's fully operational. And my guess is they're producing over 50,000 barrels a day at that point. And then the numbers really start to show up. And I guess the last little tidbit as far as operations I'll throw in is they're also going to have, I think it's like 830. At the end of Q1, they had like $834 million worth of net operating losses. So that's a little kicker. And I'm assuming after Q2, they'll have another 100 or 150 million to tack onto that. So there's a little bit of extra juice. Not that the valuation needs it, but if
how big it's so much operating losses in a SPAC shell.
So basically, in 2022. I think it was like 2.5 million, and that was 93 and 23. 2024 is a big year. They had 630 million almost of NOLs. And then for the first quarter this year, they had like 110 million. So between legal expenses, repair work, all the different things, right, that adds up over time. But with having the pipeline crews on standby, legal expenses, all the stuff that's happened in Q2, then like, you compare that, there's still no revenue. I wouldn't be surprised if the operating loss for Q2 is somewhere in the ballpark of 150 million, if I had to guess. But those are rough estimates. I don't think it is going to be a huge issue. But basically, I would guess at least 2 to 3 years of NOLs. That'll be a nice bonus some point down the line.
Which, as we said, both of us were triangulating around $1 billion of EBITDA. You've got $1 billion of tax shields that saves a pretty penny for a year or two. Cool. Ben Kalleran, Kontrarian Korner, I'll include a link in the show notes. This has been great. Again, I think my biggest worry about Sable is I buy it and then I'm just getting my face ripped off by someone like you who's just burning the phones down, and every trade is the wrong one. But this has been awesome. You're obviously super deep in the weeds here. And thanks for coming on. Looking forward to having you on again, maybe in a month or two once the oil gets started flowing.
Yeah, thanks for having me. I'm definitely looking forward to that fire marshal sign off. Hopefully we can do a recap and get more into the weeds on valuation, kind of potential upside there.
A quick disclaimer: nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.